What's good, guys? It's Krabby Trades here. Today I want to go over understanding fair value and premium in price action. Super simple concept, main structure of my trades, what I look for, how can it affect your entries, exits, bias, etc. Everything this video mentioned is of course not financial advice. This is just the way I like to go about things. And let's get straight into it. Off the bat, as you guys can see, I have two external highs, one high, one low. This is my current range in price action. So I'll always mark both out. Now the reason why I know that is obviously we have a new engineered low after taking out 121.50. And obviously this is also all-time high, I'm pretty sure, at 340.75, sweeping all externals previously. So this is our highest swing high and our previous lowest swing low in, of course, our 15-minute chart. Now it's all relative, of course, based off what time frame you were on. In my 15-minute time frame, external, external, and then we have internals. Now, with internals will provide you with continuation models into draw sitting lower, for example here. So off the bat, what I would look for is instant weakness, and by that I'd obviously look for displacements, impulses. I'd look for rev models lower, continuation models. Now, based off the 15-minute, this is an internal. If we dumb it down to the 5-minute, as you guys can see, this would sit as an external high off this range here. So we have external sitting lower, and we have the high sitting in between as well. So off that high, we are obviously looking for some downside. Now, how do we make sure that our draw is clear? We use the fair value premium method. Now, let's just see if we go take this low here first. Perfect. So our draw is playing out. Let's dumb it down to the 5 or the 1 here, and let's see. As you guys can see, we have sweep of 249. Fantastic. We have a clear shift in price. Now, off the bat, the fair value gap that I like to personally take is the one closest to structure. Closest to structure, right? Stop loss will always be that previous high. So the stop loss would have been around 16 points with a price target at probably 181 first and then 128 for the next price target. So around a 100-point trade. So as you guys can see, this is the reason why I use the fair value premium method. Now, what does this offer you here? So you'll have premium sitting at a high. You'll have fair value in between, either an imbalance. People do order blocks, BPRs, etc. Anything in between your externals will sit as an internal. So essentially here, if price is looking to seek your external low, we take the external low and shift off the low. Price will then need to retrace into structure high, which is also a shift in price, which is also your fair value, to premium sequence. So this premium high needs to be clear. Now this premium high should be an external and it should be following trend. So for example, as you guys can see, once we took this internal high, the reaction off the internal high was absolutely fantastic. It's exactly what I look in price. Price failed to seek higher at 251. Your continuation model lower, and that's absolutely beautiful. This is exactly what you want to see in price action. Now we can continue off of that as well. Let's remove all these levels. Let's go back to the 15-minute and let's continue. So as we're continuing, I will delete this stuff. So we continue. We start basing up at this low here. Now we just formed an internal low. So preferably for a model, I'd like for this internal low to be swept with some continuation higher. Let's see if we get that. Perfect. Internal low swept. Let's continue here. Beautiful sequence higher. Let's target internal high. Beautiful. Now let's see if we had a fair value premium sequence. So as you guys can see, we have inversion. We had a shift in price. We had, of course, fair value premium sequence right to the high. Now, of course, this fair value premium sequence is not just for every single trade. What this is supposed to do is offer you a clear structure in your trades for you to enter with a stop loss, an entry, and a clear exit. So this is the lowest point that price should retrace before continuing into a high. This is why I always use the premium fair value sequence. Absolutely fantastic. Now, of course, you can always target internals as well. Nothing wrong with that. But look how everything perfectly plays out. We can dumb it back down to the 15 now. Now, if we hold very nicely here, we should shoot for 251, which as you guys can see, we did. Now, let's see if we shift lower, get some continuation lower. We have draw sitting at around 56, and we have this low here at around 56.50. Sweep of internal. Beautiful shift lower. Let's see if we take the low, and there you guys go. Absolutely perfect. Use the internal external method with the fair value premium method. It will simplify your trading so much. I can't stress it enough. Trading is difficult on its own. I'm just simplifying everything for you guys. That's all you need. Fair value premium. That's it. Internal and external ranges, and you will bank in price like this. It doesn't matter if you're range based, you will know. Your model only applies at those certain levels. Anything in between, you do not touch. Look how we form models at the high or the low. It's exactly what I look to trade every single day. So please make sure you guys do that. Understanding fair value to premium range is super easy. I can't even complicate it if I really wanted to. As soon as you had your shift lower, you had your expansion, guys. Look at this. Beautiful. Around the 50% mark. Stop loss around 18 points. Price target at 103. Absolutely fantastic. This is exactly what you look for every single day. Your draw matters, your entry matters, and of course, the range in price matters. How far can price continue for your price target? Your first price target, here, here, and then the last one here at 54. So absolutely fantastic sequence. I really recommend you guys try it out. If you guys are looking to see what it looks like exactly, you have internal, external, shift in price, external. Now, of course, follow your bias. This works best in bias if your bias is correct. If you need the model after for your fair value premium method, that's also okay. Nothing wrong with that. But this is essentially what I use every single day. This is how I catch those 200-300 point trades. I'll move the stop loss to the wick highs on the 1 minute and just let it continue lower and lower and lower. So I hope you guys found this video helpful. And if you guys want more of these, please drop a like. Thank you guys.